Right now, while most people are sleeping, billions of dollars are silently moving across global markets. Investors are panicking, governments are watching closely, and one asset is exploding like never before in history. Gold has just crossed $5,200 per ounce, and experts are now asking a shocking question. Could gold actually reach 2 Lakh? Because whenever the world smells war, money runs to only one place: gold. What's happening between the United States, Israel, and Iran may change global wealth faster than most people realize. Now listen carefully, because what I'm about to explain could decide your financial future, or help you understand the biggest wealth shift of this decade. Just hours after tensions escalated in the Middle East, global markets reacted instantly. Investors didn't wait. They moved fast, pouring money into gold and silver. As fear spread across financial systems worldwide, reports show gold surged above $5,270 per ounce, one of the strongest rallies ever recorded. Driven by rising geopolitical risk and uncertainty surrounding military actions involving the US, Israel, and Iran. And this is not just another market movement. This is fear pricing itself into the global economy. History teaches us something powerful. Every time conflict threatens oil routes, global trade, or political stability, investors abandon risky assets. Stocks shake, currencies weaken. But gold? Gold becomes protection. Gold becomes trust when trust disappears elsewhere. Right now, traders across New York, London, Dubai, and Asia are preparing for volatility, unlike anything seen in recent years. Analysts say that if tensions continue or expand into a wider regional conflict, safe haven demand could push gold even higher in the coming weeks. But here's the real question nobody is calmly explaining. Why are experts suddenly talking about 2 lakh gold? Because the current rally is not driven by only one factor. It's a perfect storm. First, war fears. Second, rising oil uncertainty. Third, stubborn global inflation. And fourth, massive institutional buying. When military strikes or geopolitical confrontations occur in the Middle East, energy markets immediately feel pressure. Oil supply fears increase inflation expectations worldwide. And when inflation rises, paper money loses purchasing power. Investors then rush toward assets that cannot be printed by governments. Gold becomes the ultimate insurance policy. And that's exactly what we are witnessing now. In fact, market data shows gold has already climbed dramatically over the past year, gaining massive momentum as global uncertainty increased. Trading volumes surged as headlines from the Middle East triggered aggressive buying across commodity exchanges. Think about this for a moment. Gold doesn't move like technology stocks. Gold moves when confidence breaks. And confidence right now is fragile. Financial institutions are quietly preparing for possible chain reactions: higher oil prices, market corrections, currency volatility, and investor panic flows. Some analysts even warn that prolonged conflict could send commodities into a new supercycle. That means gold and silver may not just spike temporarily. They could enter a long-term bullish phase. Now imagine this scenario. If tensions worsen, shipping routes near critical oil passages become threatened. Energy prices surge globally. Inflation returns stronger. Central banks respond by protecting reserves. What do central banks buy? Gold. In fact, central banks around the world have already been accumulating gold reserves at historic levels over recent years, preparing for exactly this kind of geopolitical uncertainty. And here's something most retail investors realize too late. By the time headlines scream gold at record highs, smart money has already positioned itself months earlier. Right now, markets are reacting emotionally. Fear trading is dominating decisions. And whenever fear enters markets, price movements become explosive. We are already seeing this effect locally as well. In Pakistan, gold prices jumped sharply, crossing more than 550,000 rupees per tola, reflecting the powerful impact of international price surges. That means this is no longer just a global story. This is affecting everyday people. Jewelers, investors, savers, and families planning their financial future. But here's the twist most people miss. Gold doesn't rise because war is good. Gold rises because uncertainty is expensive. Every missile headline, every diplomatic warning, every military escalation adds another layer of fear priced into markets. And markets hate uncertainty more than anything. Now let's talk about the 2 lakh prediction. In India, gold is already trading near historic highs. And analysts believe that continued geopolitical escalation combined with inflation pressure could push prices toward that psychological milestone. If momentum continues, but will it really happen? The honest answer is this: it depends on three things. How long tensions last, whether conflict expands regionally, and how global economies respond. If diplomacy calms the situation, gold may stabilize or pull back slightly. Markets often spike first, and then cool once clarity returns. But if escalation continues, gold could shock the world again. And here's something fascinating about human behavior during crises. When fear spreads, people don't chase opportunity, they chase safety. That's why during financial crashes, pandemics, or wars, gold repeatedly proves its importance across centuries. Empires have fallen, currencies have collapsed, but gold has remained valuable through every generation. This moment feels similar to historical turning points where global markets suddenly change direction. Some investors see risk, others see preparation. And the biggest mistake ordinary people make is ignoring signals until prices become unreachable. Because once momentum starts in commodities like gold, moves can become extremely fast. Days, not years, can redefine price levels. So the real question is not just whether gold will hit 2 lakh. The real question is, are we entering a new era where geopolitical instability permanently reshapes financial markets? Right now, the world stands at a sensitive crossroads. Diplomacy and conflict are moving side by side. Markets are reacting minute by minute. And investors everywhere are watching one chart more closely than any other: the gold chart. Because gold is not just metal, it's a warning signal, a reflection of global fear, and sometimes a preview of what comes next. So keep watching the markets carefully. Watch the headlines. Watch oil prices. Watch central bank moves. Because what happens next in this geopolitical story may decide the future direction of gold, and possibly the global economy itself. And if gold truly marched toward 2 lakh, today's prices may one day look unbelievably cheap. The world is changing fast. Money is moving silently. And the gold rush of 2026 might have only just begun.